Hello everyone, welcome back. Welcome to day 7 of the Simple Trade Profits training course, the free training course that we're putting out. Sorry I wasn't able to get a video done yesterday. I had a lot come up, but it wasn't because I didn't want to. I definitely wanted to get to this video because in this one I'm going to talk about a custom indicator that I use. You may have seen me talking about it in the VIP group recently. So I'm going to jump into it. There's not going to be very many pictures to show you. We're just going to really get straight to the chart pretty quickly and show you how it works and how you can use this with the things we've learned so far with the trend lines, with the support and resistance. And I'm going to show you a perfect example of when support, resistance, and trend lines came into play, and I used this indicator as well to get a profitable trade. So the indicator is called Ichema or whatever you want to call it. It's basically a combination of two words, Ichimoku, the Ichimoku cloud, and EMA, exponential moving average. So one word, Ichema. It consists of, like I said, the Ichimoku cloud and 3 moving averages. Some of the Ichimoku pieces I remove off. I only use certain pieces of it. I don't use the whole thing. It's not all real reliable. I really don't even use the cloud that much. I mean, I reference it sometimes, but it's mainly these 3 moving averages that I want to show you. So like I said, it consists of 3 exponential moving averages, EMAs. I have them colored here as green, red, and yellow. The default, whenever you first put the indicator on, is going to be a different color, but I like to change mine. I'm used to certain moving averages being certain colors, so I edit them. So yeah, it has 3 moving averages. We have the 55 EMA, which is, in this picture, is the green one, the 99 EMA, which is the yellow one, and the 222 EMA, which is the red one. And these essentially act as dynamic support and resistances. Dynamic meaning that they're not static. They don't stay like a horizontal support. You know, it doesn't move. It just stays in one spot. It's a static support. These are dynamic as they move with price as it moves. So they can help you find support and resistance zones. And they, you know, whenever they come together with a trend line or a support and resistance, and one of these EMAs line up with it as well, then you have what they call confluence, where you have a confluence of different support and resistances, which is a good indication that price will either be supported there or rejected there. So yeah, like I said, they act as dynamic support and resistance. The second piece of it is the Ichimoku cloud. Like I said, I do use it a little bit. Not a whole lot. Sometimes it acts as support and resistance, but I'm more concerned with these moving averages. The cloud does give you an idea of which way things are trending. You know, unless you're on like the 1-minute chart, then it's going to flip green to red constantly, and it isn't really going to matter. So it is a colored cloud, essentially. Red indicates, you know, that you're in a downtrend. Green indicates that you're in an uptrend. The general rule of thumb is whenever price is, like in this example over here, when price is above the cloud, like it is right here, that you would only be looking for longs. When price is below the cloud, as it is right here, you would only be looking for shorts. When price is in the cloud, you know, if you're being really conservative, then you would avoid trading altogether. So they also can act as dynamic support and resistance, the top of the cloud and the bottom of the cloud. And it's definitely not something you want to use by itself, but when it's, you know, when you have confluence of like here in this example, let's look over here. Right here, we have the top of the cloud, and we have all our EMA lines pretty much grouped together. So we have the cloud and 3 EMA lines acting as resistance, and look at how, you know, it held price down for quite a while before it finally broke out. It moved up here to the next EMA line, bounced off of it, and then finally broke out. So it can act as dynamic support and resistance as well. So I'm over here on the chart now, and I'm going to show you guys how to add this indicator and how to read it basically. So go up here to the top to your indicator tab, click on that, and just start typing Ichema. And it will be this top one here, Ichema Dynamics with EMAs and Cloud for Darth Cryptos, whatever. So we click on that. We now have it open. Now, like I said, I only use pieces of it, so I'm going to go through and kind of do some edits to it. So pull up the button that shows all my lines and stuff. Go to the indicator, click the little gear to edit it, and here we can change the colors and stuff. So like I said, I like green, yellow, red. So I'm going to change my 55 to green. I'm going to change my 99 to yellow, and then I want this one, I like it this red color, and I think it already is that color. So I take off the keygen, I take off the lagging span, I take off these two as well, and then the background is the cloud. So here are the green part of the cloud, the red part of the cloud. I click on them and I make them a little bit more visible. So I'm going to change this up to 25% on both of them so we can actually see the cloud a little bit better. So this is how I have it. Oh, and I changed this one, the tank on or whatever, to orange. That's what I've always used it as. So just get a visual of how my settings are set up and press OK, and we'll start looking at it. I don't like the cloud real bright, and I want my candles I want to be able to see my candles. And in fact, I would probably even make my EMAs just a little bit dimmer because they are pretty bright for me. So let's just look at some areas. I mean, just at first glance, you can see how powerful this thing is. I mean, look at how this green 55 EMA was support for so long. I mean, it was hovering, it was acting as dynamic support. And when it did break it, it came down, touched the 99 EMA and got rejected. Here it did the same thing, rejected. Here it kind of broke through a little bit, but also a long wick rejection. Here we are currently. You can see that it did break through, and I'm on the 1 hour. It works pretty well on the 1 hour. It does work on other time frames as well, but we broke through it, and now it's kind of acting as resistance because we came back up to the 55 EMA, and now we're getting rejected again. So let me draw a couple trend lines here because I want to show you an example from a trade I took yesterday. That's a good example of how I used this. So I'm going to draw whoa, well, there's all my trend lines. They just popped up. So let me hide some of these. Looks a little cluttery. Okay, that's fine. So here is where I took a trade on the 1 hour yesterday, right here in this area. So as we were hovering along this 55 EMA, the white line is my trend line. See, going up, okay? So we had my trend line there. We had this horizontal yellow line at 6,700. That was support. And when we were in this area, I was thinking, if price comes down to test this EMA, this 99 EMA, or to test this trend line, I'm going to buy right here because we have our trend line support, we have our EMA support, and we have our horizontal 6,700 support. And I bought right here. Now, I didn't hold it for the whole way up, but I did buy right here. We had a confluence of three, one sloping support, one horizontal support, and one dynamic support. So 3 supports we had right here. And we can see that it wicked down, got rejected, came back up, tested the 99 EMA, came back up, came up here, came back down and tested the 55, and then proceeded to go up, and we've been going up ever since. So I'm just going to scroll through here and show you guys so many. I mean, this is a great example. This is a perfect short opportunity where We broke below it. It acted as resistance. Right here, we had all three of these EMAs and the cloud all grouped together. Price came up, strong rejection from 63.40 all the way down to 6,200. You know, perfect setup here for a short. So we bounced off our trend line, and here they're all grouped together again too, and we can see that price came up, and it was struggling. This is an hour-long candle. It was struggling because we have this long wick here, but the support, the sloping support, the trend line support acted as stronger, acted as enough buyers came in this area to push it through those moving averages. But here, look, they're all grouped together right here as well. Price came down, touched it, rebounded. You know, and this looks small, but if we do the prices, this is 63.34, you know, all the way up to over 6,500. So let's just scroll through here. So many examples. Right here, came down, bounced off the 99, back up. Came down, bounced off the 99, and this is also with 6,500 horizontal support. So we had a confluence of two supports here, rejected. Came down here, bounced off of it. Here it was acting as resistance, came up, touched it, came back down. Here it was support. So we see, I mean, so many examples. I could go back to this whole chart where this happens all the time. Here it was resistance, came back down. So, you know, that's why I say to ladder your trades, because let's say we're sitting right here in this area. We see this EMA right here. We're like, well, I want to short here. What if this is resistance? Let's say you put a short in here. Rather than using, you know, all your account, because the chances of it breaking through and going to the next one, if you just did a portion of your account, it broke through, well, then it came to the next one and finally was rejected. So you might have shorted here, but if you shorted again up here, then your average would be right here in the middle, and then you would still be in profit or end up in profit. Here we had a strong rejection from this. This is the 99 rejection here. Let's go back even here. Resistance. So this is a really powerful tool. Resistance here was a little bit of support. Strong resistance here. Acted as support here to send it up. Resistance here. And this is just, I mean, I could go, like I said, for days and days and days going back through all this chart. So there was a recent trade that I took. Oh no, what did I do? So let's look at, I'm going to go to the 30-minute chart. Here was a trade that I took earlier that I told you guys about. Price came down. Here's our 55 EMA. We had a confluence of the EMA support, and I had this trend line drawn here as well from these highs to these lows. And this is the trade I did when price came down, bounced off our 55 EMA and our trend line support and was rejected. That's the short trade I did earlier. And then the one that we just did where, you know, price was coming down and we were breaking through all these EMAs, but I still thought that it was going to. So now look, we just broke through this one. This one can now be acting as support. So this is the Ichema custom indicator. This is one that somebody has made, but it's basically just using other indicators, kind of combining it into one. So if you're on a free TradingView account, you can only have so many indicators. This one's great because you get to add in 3 exponential moving averages and you get the Ichimoku cloud all considered one indicator. So it's a great tool. It's a great, it's good to use on the hourly, and you can use it on the 30-minute as well. I mean, I'm sure you can find examples of it working on really any chart, because here was this trade I took here as well. This is a 15-minute. Looks a little different on the 30-minute, came down, but I seen that on the 30-minute, that moving average was right there on the trend line support, but also on the 15-minute, the yellow, the 99 was down there too. So I was like, even on 2 time frames, it was showing moving average support right in the same area as our trend line support. So that told me that we were going to see, you know, it's only the 30-minute chart, so you're not going to see a huge bounce. Now, had this been the 4-hour chart, we would have seen a lot bigger of a bounce. But the 30-minute chart, you don't see as, you know, that big of a bounce from anything really. But I did take this trade. So this is a great tool, guys. Use this, use these moving averages, especially when you see them grouped together like this. It's just perfect with your trend line and your horizontal support. It is great to use it as support and resistance, and it'll, you know, it works very, very often. So that's it for this video. Let me know what you think about it, and, you know, leave a comment or in the free chat. You know, if you have any questions about it, just let me know. So I'll see you guys in day 8.